Welcome everyone back to our honest truth on legacy planning. There has been this ongoing trending topic about interest rate hikes, and who better to hear it from than our financial guru, Thomas from Redbrick. So Thomas, with our current interest rate hikes, how do you foresee the market is going to be like for 2023?
Hey Kelly, thanks for having me here today. I think the direction of interest rates is anyone's guess, but I think what we want to really find out is what actually affects interest rates in Singapore. So most people want to know that, and there's reason why sometimes interest rates goes up and why sometimes interest rates go down. But the most obvious reason in Singapore is because of the US Fed hikes. Now, during this period where US Feds are trying to tame inflation, right, they will start raising rates, and this will affect Singapore mortgage rates as well. So over the last year, the US Feds have been increasing interest rates by 0.75 for 3 times, and then latest in December by 0.25%. So what happens is that with the increase in the rates environment in the USA, it affects us in Singapore as well. So therefore, mortgage rates are also going up.
Oh, I see. Thank you.
Yes.
So based on our experience, who will be actually affected by this?
I think by and large, Kelly, almost everyone will be affected by this if they have a home loan in Singapore during this period. People who feel the brunt of this the most, right, are folks on floating rate packages. So if they're on fixed deposit rates, if they're on SORA or SIBOR, because in a rising rate environment, the floating rate packages accurately mimic the rise of the interest rates environment. Okay, now the second group of people who would probably feel the brunt of this are new homeowners. That means they are looking to purchase a new property. Due to higher interest rates environment, the rates will increase, and this will also increase the cost of home ownership and ultimately, right, reduce the profits that they may have enjoyed if it was a normal interest rate environment.
I see. So what do you think will be the potential pros and cons one may experience?
I see. Okay, so Kelly, I think you're asking me what are the potential pros and cons one may experience if they're on a floating rate package. Now, when the market rate rises, the cost of borrowing is also more expensive. Now, people on floating rates will then to pay according to market. But on the flip side, if the rates drop, right, then the folks on the floating rate packages will enjoy the drop in interest rates the fastest. Because remember, we spoke earlier that the floating rates will mimic the trend of the interest rate market. Now, what we could also do during this period, right, where the interest rates are higher, is that we could also place a fixed deposit with the banks to enjoy high interest rates for your deposits, right? So rather than leaving it there and not doing anything with the money.
That sounds true. That sounds true. So Thomas, what advice do you have for these people who are affected?
Okay, for folks who are impacted by the rate hikes, right, you could consider a fixed rate package at this point of time, or a short lock-in for floating rate packages. Now, I think extending tenor to reduce your monthly installment is also an option to consider during this period, so that you have improved cash flow. You can decide what you want to channel your money to, right? Borrowers with extra cash on hand can also consider interest offset accounts or place in a fixed deposit to take advantage of the current rate environment. Now, there are some borrowers who prefer to pay off their loans because they feel that they don't want to pay higher interest. But my suggestion is to place in an FD, fixed deposit, or you could consider actually deploying your funds for some sort of investments. Because down paying into your mortgage largely means a one-way traffic, and you may lose liquidity. Now, let's just like to share this concept with you guys, right? So you see the red color line here denotes how a mortgage works. It is on the reducing balance basis. So every month you pay, the principal gets lesser. But when you invest, which is the blue color line, every year or every month, depending on the investment, it goes up. So at a point of time, there will be a difference after some time, and the difference is actually the green color line, and this is what we call the arbitrage. So how interest offset account works is this. We have 2 images over here showing the differences. So the image on the left shows that the rates are charged on a full loan of $300,000, while the image on the right shows that we only charge $270,000 instead of $300,000. This is because there is a $30,000 deposit in the interest offset account. So if you have more money and it's sitting around doing nothing, you might want to consider putting monies into the interest offset account so that you do not pay as much interest on your mortgage.
Thank you, Thomas, for your time. We hope you have learned something from our sharing today. Do remember to click like and subscribe to our weekly property updates. I'm Kelly from Live for Home SG.
I'm Thomas from Redbrick.
Live for Home. We take your home as our own. Bye!